2020 has been quite a year with the pandemic, and yet the stock market has done well. So what are the investment prospects for 2021, and what should you do to protect the money you may have already saved?
For some answers, we turn to Local 4 business editor and certified financial planner Rod Maloney with his year-end money series.
It has been a decade since the great downturn, and we all remember how terrible that was. But the stock market has had a steady increase since then, and so a lot of investors sort of lost the notion that money could be lost very quickly in large amounts. And so there's only one way that we know of to guard against that, and that is diversification. It certainly may sound repetitive and boring, sort of like talking about budgeting. But the fundamentals exist for a reason, says Planning Alternatives CEO and certified financial planner Nathan Mercereau.
So when you look at your investment strategy, it's important to always be diversified, to not put all your eggs in one basket.
One of my favorite financial websites is the dollarstretcher.com. Its founder and editor, Gary Foreman, offers a simple tutorial about how to diversify.
A reasonable amount of stocks, a reasonable amount in bonds, some inflation hedge, some cash or cash equivalents like CDs, money market funds. If you have a balance, what tends to affect one negatively will affect something else positively, and you'll be okay.
And as we go into 2021, that philosophy, that approach, we see as more important than ever because there's so many factors in play. We're continuing to recover as an economy, but the financial markets always look forward at least 6, 12, 18 months out.
We could see some serious inflation in upcoming years, but we could also see some serious deflation. And so what I suggest to people is try to keep balance so that you're okay no matter which direction the markets go.
Deflation that Gary was talking about there is when prices go down. Now, for you and me, consumers, we're actually happy to see prices go down. But that's not what happens for companies. When their prices go down, that's less money in the door, and it could mean job cuts and the like, and that's trouble for the overall economy. Gary also warns against government borrowing and the fact that taxes could be going up into the future. And with all of those things looming out there, staying diversified is the absolute key. Rod Maloney, Local 4.